This conference will now be recorded.
Good afternoon, everybody. Before we start, a quick tech check. Is my screen visible and am I clearly audible to everybody? Please type in a Y or a yes to confirm. Thank you. Good afternoon, Mr. Haldar. Okay, so today's on a Saturday afternoon, we are here to discuss some trading strategies using RSI, Super Trend, and the Bollinger Band indicators. I am Suchirunta, who will be taking this session. And before I start with a new topic, I would like to ask you all whether you guys have any doubts with respect to the previous session with regards to the intraday pre-market trading strategy. Have you all tracked during this week? This week, since India VIX was higher than 20, not you did not get to trade too many opportunities though, but have you still guys tracked that particular strategy? It's been a week. You got 5 trading sessions. A quick answers will help. Yes. Okay, great. Great. So Shovan, how was the experience since you traded? Yes, VIX was 22. Uh, and we had a lot of trades this week. We had a lot of stocks popping up since VIX was on a higher side. The number of stocks which got filters was on a very, very high side. Very good, Shovan. That's nice to know. That's really nice to know. Yes. So I don't think there is any doubts with respect to that. We can move on, right? Yes. Okay. Cool. Akhilesh, were you stuck somewhere with respect to any doubts or any conceptual hiccup which held you back? Uh, okay, no problem, no problem. Shovan, I would like to repeat myself here that this pre-market intraday trading strategy is purely a statistical based strategy. So do not get your emotions in between. Please put your orders before. You can use the bracket order system on Zerodha or Upstocks or any whatever brokerage platform you are using, or normal orders, so that you book your profits or book your losses exactly on the price which is there on the sheet which is calculated, right? Because any which ways we are trying to book only 1%. 1:1 is the risk reward. So I will not suggest you all to get in your human emotions in between and start trading. Okay, okay. Right. Yeah, Zerodha is not allowing bracket orders currently because of the extreme volatility in the market. That is what they say. So nevertheless, we can use the normal orders. It just takes a little bit more time to put up the order since a bracket order is much more convenient. Okay. I'm having a little cold and not feeling too well. Any which ways, we'll start with the session. So going forward, let us start. So basically, market, what are the most important dynamics or the pillars on which market move? See, we need to understand that more than the charts and more than proper analysis, you need to understand the psychology behind the market movement. this understanding the psychology is extremely important to be successful analyst. You know, once you understand the psychology, the quality of your analysis will automatically improve. So we need to understand that market is based on four important pillars, or if we say price, bhav. भाव के पीछे क्या है, क्या four important pillars which we need to understand before we take up a trade. So the first one, as you can see here on the screen, is price and action, right? Price, action and trend. Price, action and trend is basically the movement of prices. And what do you use to identify a price, action and trend? Any answers? Any answers? How do you uh, identify the price trend and action? So you simply use higher tops, higher bottoms, Dow theory. Trend by ADX. More importantly, we are talking about price action and trend. So I think moving average will be better. Shovan, yes. Akhilesh, I think more than the ADX, I feel moving average and simple Dow theory will clear the concept that which trend. Yes, you can figure 13, 21, 34. You can absolutely use for finding out the order of the trend. That's absolutely correct. 13, 21, 34 works well for an uptrend and for a downtrend. So if the price is trading above it, the trend order is up. If the price is trading below the trend order is down. So once you understand the trend of the market, and then you need to check the momentum. What do you mean by momentum? Momentum, what do you mean by momentum? Any guesses? You all want to try? What is momentum? Momentum, by momentum, we mean the strength, the speed behind the movement, what you can see on the charts. Acceleration of price, yes, definitely we can name it as acceleration of the price. So rate of change, yeah. So basically the speed, the rate of change, the acceleration, the strength beneath the price action is measured by momentum, is said by momentum. And again, momentum is very, very important because we need to check that what is the strength behind the price action which we see on the charts. So to check the strength or to check the momentum of the trend, we have got various indicators. Most oftenly, what we use is the RSI indicator, which is the relative strength index. Alternatively, you can use the stochastic, and you can also use it with RSI. So RSI, stochastic, you have MACD also. MACD actually doesn't really measure the momentum, but yes, RSI and stochastic or ROC is very, very actively used to measure the momentum of the trade. We also use something known as is the relative strength, RS, relative strength comparative, where you use the where you check the strength of a particular stock vis-a-vis the index, or vis-a-vis its strength and vis-a-vis its index, sorry, right? So that is relative strength comparative. So price action and trend, momentum, volume will come in the price action and trend only, Aditya, because when we are studying at price action, we are studying it with the volume. So the traditional price patterns which we study, breakout of support and resistance or trend lines, they are always confirmed with the volume. So yes, volume will come under the price action and the trend tab. Okay. The third is the volatility. Now, market, even though you've got the best of analysis, unless and until the market is volatile, unless and until the market moves, you will not be able to make money out of it, right? Because you need to have the underlying security must have the adequate volatility for it to move, whether it is on the upside or on the downside. So volatility is again a very, very important indicator, which should be studied whenever you are taking up a trade. So how do you measure the volatility? See, the index volatility you can actually simply track from India VIX, as we discussed the previous session. But if you really want to specifically check out the volatility of a stock, you use indicators like the Bollinger Band. You use indicators like the average true range, ATR. So these actually check out the volatility of the underlying stock, right? Coming to the time, so time is a very, very subjective thing. We don't really get into the time dynamics, but yes, whenever you are taking up a trade, you have an assessment that okay, I am taking up a trade for a shorter term period, for a longer term period, because that is how you will be deciding your strategy. So again, the time frame at which you want to trade is again it becomes a very, very important thing to assess before you actually enter into the trade, right? Am I clear here? Any questions still here? Yeah, sure. So I hope you all know Bollinger Band, right? We can simply start off with the strategy, or you all want me to explain Bollinger Band? Any doubts in what is Bollinger Band? Any doubts in what is Bollinger? No, right. So you all know what is a Bollinger Band. Okay. So what I'll do is I will just talk about it in a sentence or so that we will not have any. Let me open another fresh, let me open a trading view also. So I open the Nifty chart. Okay. And I plot the Bollinger Band indicator. So I plotted the Bollinger Band indicator. Now, what is this Bollinger Band telling you? Bollinger Band is basically a volatility indicator, and it tells you that the stock is the volatility of the stock doesn't remain the same always. The volatility contracts and the volatility increases. Okay, it is a cycle. So if you are seeing currently that the volatility is very, very high, it is eventually going to come down. And on the contrary, if you see that the volatility has extremely gone down, it will eventually increase. So how do you actually calculate a Bollinger Band? It's simple. It's basically what you do is you plot the 20 SMA on the charts and two standard deviations up and two standard deviations below. You basically plot a band. So the prices are expected to be within the band 95% of the time. So what I have done is, look here, this is a 20. So the standard inputs on for a Bollinger Band is 20 and 2. We will be using and sticking with the standard parameters, and you see most of the time the prices is trading within the band, right? Do you get it? So this is what is a Bollinger Band indicator. Now what I'll do is I will just change the setting little bit, and I'll just remove the highlight behind the background. Okay. So this is the Bollinger Band indicator. Now you have we can actually trade a Bollinger Band. We can use the Bollinger Band indicator at specific places and can trade them, which give you specific targets. In fact, if there is a price pattern, if we include a Bollinger Band to it, we add it I like a filter, the probability of our success to that particular trade, the quality of our trade becomes much better. So what does the Bollinger Band tell us? Bollinger Band basically tells us the volatility divergence. We are going to study, the first thing is the volatility divergence. What do I mean by volatility divergence? That the price might be moving in a certain direction, but is my volatility supporting it, or is my volatility going in some other direction to it? So that is the area when we are actually getting some specific signals. Okay. Okay. Okay, so we use the Bollinger Band with M top and W bottom. Okay, now what is an M top and what is a W bottom? I think we all know. Price when is making a double top, or price when making a double bottom. So first thing what we do is, whenever we are identifying a double top or double bottom on the charts, we plot. Yes, I will explain it with an example. Just understand the strategy first, please. Anjali, please have some patience. So in the Bollinger Band strategy, what we do is we first figure out a double top or a double bottom. So whenever there is a double top or a double bottom on the chart, we filter it with the Bollinger Band indicator to check for any volatility divergence and volume divergence. If there is volume divergence and volatility divergence, the chances of it successing is higher. So how do we do it? We check the first bottom should be outside the band, as you can see here. First bottom, the first price bottom should be outside the band. The second bottom should be inside the band. You will check the relative distance between the band. Keep price and the band, the difference between the price and the band का relative distance क्या है वो आपको check करनी होगी. ठीक है. Volume again has to be studied. So volume should be lesser in the second bottom. So if we have identified a double bottom, the second time when the bottom is being made, the volume should drop. And then whenever you are getting a breakout, you enter. Stop loss will be the lower band, and the target will be simple, how you calculate the difference between the bottom and the breakout level. So let us see on the charts. Um, let's check BPC. Okay. This is the weekly chart, no wonders. Right. Now look here. This is kind of a double bottom. Can we call it a double bottom here? Right? So the first bottom is made outside the band. Look here. I hope everybody can follow my mouse. The first bottom is made outside the band. The second bottom is well within the band. Okay? Look at the relative distance. Band and price ka difference is this big, and there is practically no distance between the band and the price. So this is what is called as a volatility divergence. कि volatility यहाँ पे diverge हो रहा है. First bottom outside the band, second bottom inside the band. Okay, let me just check how to do that. I need to mark it now. Wait, give me a minute. Okay, look. So the first bottom is outside the band. The second bottom is inside the band, right? Look at the relative distance. The relative distance between the band is here, and there is practically no distance. So this is a volatility divergence here. Then you check for volume divergence. Volume divergence tells you that the volume should be lower in the second bottom compared to the first bottom. So if we clearly see, the volume is falling over here. So volume is lower in the second bottom. What is your breakout? What is your strategy? You will trade on the breakout, right? So where is the breakout level? This is the neckline of the pattern. Okay? So when will you trade? You will trade on the break of this level here, and your stop loss will be the lower band. Your stop loss will be the lower band, and your target will be vertical distance between the bottom and the neckline, utna upar. This is your vertical distance. So if you see here, prices has gone up, it came down, but it did not hit my stop loss, because as the prices are going up, the band is also going up, and your stop loss is automatically moving up. Stop loss is automatically getting trailed, and finally you are being able to achieve your target over here. Am I clear? Was this example clear? I will show you some more examples. Please quickly type in a Y or a yes. Great. Yes, I'm showing some more example. Now look here again, I can figure out one more example. Stop loss will be piercing of lower band. Yes, Atul, yes. No, piercing. So stop loss is basically you put your order, no? So if it is pierced, it is gone out. Now this particular strategy you will use mostly on the daily chart, because it's a swing trading strategy. On a 15-minute time frame, the you may see that there is a lot of volatility and the stop loss may get hit. Okay. Now look here again. This is matching bottoms. So first bottom outside the band, second bottom inside the band, relative distance over here, and there is no relative distance. So it is volatility divergence. There is volume divergence. You will, sorry. You will trade on the breakout, which is this level. So once this gets broken, your lower band becomes your stop loss, and your target is minimum distance is this, which gets achieved within 2 trading sessions. Okay, so this is another example. Excuse me. Hello. Yeah. So I'll open to uh, excuse me. So look at the 15-minute chart. I can clearly see one more example. See, yes, Sunil ji, 15-minute chart will be volatile. So the risk reward ratio might not be very favorable. Sorry, I'm having a very bad cold. So now look here, I just converted into 15-minute and just see a great example here. Look here. यहाँ पे this is the first bottom here. Already taken medicines. Thank you, Abhishek. Yeah. So look, first bottom here. This is outside the band. It is penetrating outside the band, and look, check the relative distance. Even if it doesn't penetrate exactly outside the band, you need to check the relative distance, which is very, very important. So iska distance compared to iska distance. So there is a volatility divergence and there is volume divergence. Clearly see the volume is dipping. The second bottom has got very low volumes here, and you will trade on the breakout. So this is where the breakout is, and eventually it is achieving. Yes, Aditya, so it best works in the daily time frame. However, see this, there is no such strategy जो कि 15 minute में नहीं work करेगा and only it will work in daily. No, it is the chance, the success ratio what we talk about. So because 15-minute chart is got a higher volatility, so you know the chances of you getting stop out may be higher. However, 15-minute you can try it out, just that the probability of success might be lower. So this is, I just saw, I just converted into a 15-minute, and no, there is no function of the median line currently in this particular strategy. So you can actually remove it. You know what actually is checked is normally what happens that once the stock goes beyond the median line, then the momentum catches up. So if you see, yes, I'll explain it again, Akhilesh. So once the price crosses the middle line, then the momentum catches up for the stock to move up. Volatility divergence is the relative distance between, wait, look here. I'm just zooming in. This is a double bottom, right? Look. The relative distance of the price vis-a-vis the band. So here clearly you see the first bottom is made, the distance between the band and the price is negligible. In fact, the price is penetrating the band. So first bottom is outside the band. The second bottom is clearly inside the volatility band. So the relative distance, the distance between the price and the band is higher here. है ना? So this is a volatility divergence. This is where the volatility is diverging. Matlab volatility is shrinking in the second point. And the volume is also shrinking. Akhilesh, higher in the sense what? Higher from where? I didn't get that. I didn't get higher from where point. The reference point is this. Reference point is the lower, look, the reference point will be the lower band. The lower band is this, and the distance between the lower band and the price. Here, look, the lower band and the price distance. The price is actually penetrating the lower band. So if you see, the distance between the price and the lower band is falling in the second, I mean, the distance is rising and the volatility is falling between the first bottom and the second bottom made. It doesn't mean the consecutive candle, it is the two bottoms which is made. So if we see a W bottom on the charts here, so this bottom, if we have to see the band should be something like this. So first is touching the band or outside the band. The second bottom should be inside the band. So the distance between the price and the band is less here. The distance between the price and the band is higher here, which is indicating that the volatility is coming down. This is a volatility divergence. Sunilji, why will the divergence be always there? See, the price is almost at the similar level. Wait. If you look here, price is almost at the same level. It is a clearly double bottom, no? I'm hiding the Bollinger Band. See, isn't this a W top bottom? So you have to identify a W and then put the Bollinger Band and check the relative distance. Right, I will just show you another example where there is no volatility. Let's figure out. Now this is an M top with volatility divergence and volume divergence. So the opposite. So W was top and M is W was bottom and M was top. Now look at here. The first top is almost going outside the band. Second time, when the prices are almost at the same level, the band is upper and the price is below within the band. The volatility has dropped. The volume has dropped. See, the volume has dropped here. And this is the breakdown level. This is the breakout level. So the moment this gets breached, it is a sell. So this is the M top Bollinger Band, M top Bollinger Band, and the previous one was W bottom. Let me show you a area where there is no volatility divergence. Yeah, look here. Nice. Oh, this is not a M. Wait. We have to first identify an M. Huh? Let's check out Nifty. We will take up the trade, Atulji, where there is a volatility divergence. Okay, now look here. ये देखो. This is not. Just figure out a chart which has a W or an M and then we can study it. Yeah, now look here. This, I don't know what is happening, what is going to happen, but this is matching tops, right? So first is inside the band and the second is outside the band. So this is not a volatility divergence. You will not trade this. इसको उल्टा होना चाहिए था. This should have been outside and the second one should be inside. In this case, the second one is outside and the first one is inside. So this is not a volatility divergence and you will not trade this scenario. Currently, Reliance is in a sideways trend, so no opportunity as per se. Again here, look, ये देखो. This looks like an M. This looks like an M, right? But the first one is inside the band and the second one is outside the band. We don't want it like that. We want it ulta. We want the first top to be outside the band and the second top to be inside the band. Am I clear? Any doubts, please ask me. Let's check Bharti. This one. Bharti. No, you have to visually identify it, Sunilji. Look here. Look, this is an M. Can you see this is an M? Right? I'll just check Grasim. Yeah, see, very nice W on Grasim here. Just opened. See, this is a W. So the first bottom is very, very near to the Bollinger Band. The second bottom, the distance between the Bollinger Band and the price is there is there is a difference. So yes, this is a volatility divergence. And if you very carefully see, look at the price volume. The volume during the first and the second, the volume is dipping. See, the volume is dipping here. So clearly on the breakout, you trade on the higher side with your lower Bollinger Band as a stop loss. You want to check on the line chart? Check on the line chart. Is it clear now? And let me just hide this line for you all. Now see, But you will not be able to check very clearly if you choose this as a line chart, because you need to see the relative distance. However, in this particular case, you can see very clearly. See the distance between the Bollinger Band here and look at the distance. There's hardly any distance. So there is a W, there is volatility divergence, there is volume divergence, and you trade on the breakout. So where will you trade? This will be your entry. ठीक है? This is your entry. Your stop loss will be the lower Bollinger Band. Okay, and your target will be vertical distance. This is your target. Have you got it clear? Saurav, yes, you check the relative distance again and again. I'm telling you, it is see the distance. This price vis-a-vis the band, it is hardly anything. Whereas look at this bottom and look at the distance. So where is the higher distance? On the second bottom, which exactly what we want. Stop loss, ideally, it should be the lower Bollinger Band, but you can keep a tighter stop loss also. Let me show you Tata Motors. Now look at this. Tata Motor, I'm just hiding this line, these lines. I'm just see. Tata Motor, there was a M which got formed. First top was outside the band, second top within the band, right? And you trade here, volume is dipping and eventually it goes down. The target will be breakout point and the distance between the top, which is this. This is where the target gets met. Aditya, Anjali, what I am again repeatedly telling you is that you have to check the relative distance. The distance between the first top and the band, the distance between the second top and the band, second top and band ka distance should be higher than the distance between the first top and the band. Is everybody clear on this? I still have doubts. Please ask again in case if you're having any doubt. Akhilesh, Anjali? Yes. Anjali, are you clear? Okay, fair enough. Yes, so let's take a bottom example again. Now look at here. This is, there is no volatility divergence here. यहाँ पे W है. This is a W, but the distance between the first bottom and the volatility band is much higher than the second one. दिख रहा है आपको? In the M top, the strategy is sell. In the W bottom, the strategy is buy. Now look here. This is a W. Please look here, very important. This is a W. This is a W. What happened? Yeah, this is a W. Now see, first thing first, the first bottom is inside the band and the second one is outside the band. So it is opposite. Secondly, the volume is also not in the favor. The volume is not dipping. So this W you will not trade. Why? Because there is no volatility divergence, no volume divergence. Aditya, you can hold short selling positions only if you trade in the FNO segment or the future segment. In the cash market, you cannot hold it overnight. Unless and until you have it in the demat account, those shares. Yeah. So can we move on forward? Is this clear? Okay. So I'll repeat again. Bollinger Band, the price action should be making a double top or a double bottom. First bottom or top should be outside the band. Second bottom or top should be inside the band. Simultaneously, if it is not outside, you will check the relative distance. Agar distance between the price and the band is increasing in the second bottom or a top, then there exists a volatility divergence. If the distance is not increasing between the price and the band, then there is no volatility divergence and you will avoid it. Volume should drop in the second top or bottom. Entry will be on the breakout based on the price. Stop loss will be the lower band in case of bottom. Stop loss will be the upper band in case of top. Target will be the distance between the top and the bottom. So this is the top and the bottom. Target will be vertical distance between the top and the I hope I'm clear. Moving on to the next slide is Bollinger Band pinch. What is a pinch? Now, as we know, Bollinger Band is a volatility indicator. The stock does not have a same volatility throughout. You will see any stock you see, the band is moving up or down itself. Look at the width or the how wide or how narrow the particular band is. Can you see? Right, so the volatility is increasing or decreasing in a particular stock. Now look at this case. In Tata Motors, currently the volatility is huge. It will eventually come down. So what is this pinch strategy talking about is that whenever there is a volatility contraction, matlab whenever the upper band is approaching the lower band and the lower band is approaching the upper band, just like a pinch, you know, when you want to pinch somebody, okay, then it is expected that the stock price will make up a big move. Now, which direction the movement will happen, that we do not know. Why? Because this is only indicating that the volatility is going to increase. It's only indicating that the volatility, underlying volatility is going to increase. Now, which direction, that the price will tell you. So let us look at an example here. Say in this particular example, see here, the lower band is coming down and the lower band is coming up and the upper band is going down. So the volatility is contracting here. Can you see very clearly towards the last? So this is indicating that the volatility of the underlying stock is going to increase. Now basically, when you look at such a situation, you get ready for a breakout. So the moment there is a breakout, whether on the upside or on the downside, you enter into the trade. So you identify your breakout levels in advance. In this case, the breakout level is this. And this is the downside breakdown level. So either ways, when the price penetrates, you will enter into the trade. So in this case, it broke up on the higher side with volume, so you buy with lower band as the stop loss, with lower band as a stop loss. Let us look at another example. Oh, see, such a nice pinch I just saw. See here. Can you see here? The upper band is coming down, the lower band is going up, and look at the volatility. It has really contracted over here. So you are expecting a big movement. Now, which side the movement will come, we do not know. We get ready for a upper breakout and a lower breakout. So this is my upper breakout level. This is my lower breakdown level, and whichever side the breakdown or breakout is, we will trade if it is supported with volumes. So it traded on the upside. Am I clear? Any doubts, please ask me. Akhilesh, which chart is it? Reliance chart which you are looking? So Akhilesh, all these patterns all these strategies will have around a 70 to 75% of hit ratio. Yes, the success ratio of all these strategies are around 70 to 75%. So the target is basically the difference between the volatility range. Okay, normally, ideally, what I suggest is that you should be booking out the targets on the next, 1:2 risk reward ratio. So 2% above should be your target and 1% should be your stop loss. The lower band is any which ways your stop loss always. Okay. Yes, Akhilesh, tell me. Okay. Okay, great. So let me move forward then. No, Anirban. The 1:2 risk reward is with the cash market, not in options. It will not work with options. I'm moving on to the next strategy, which is the golden swing strategy, as the name which I give. It is to be followed strictly on the daily charts. You cannot do this particular strategy on the intraday time frame or a weekly time frame, higher time frame. This is a very specific strategy which is to be done specifically on the daily time frame. We will be using 5 indicators on this. Okay. What are the 5 indicators? We will be plotting the 14 period RSI. We will be plotting the stochastics as 55, 34 and 21. We will be plotting the 10-2 super trend, not the 10-3 super trend, but the 10-2 super trend, normal Bollinger Band and 5 period ATR. Let us first plot the same, okay? So I will use the investing.com. I have just plotted it. I'll remove and I'll plot again for you all. So first what I will do is I will use any chart and use it on my daily time frame. Then I will plot my Bollinger Band. I will plot super trend. Okay. I will plot RSI. I will plot ATR. Sorry. I will plot ATR. Okay. I will plot stochastic. So these are the 5 indicators which I'm going to plot. Okay. Now let me just change the parameters. First thing, I'll choose the Bollinger Band. I will hide the background. I don't need the background here. Okay. Then I go to the super trend. I change the parameter to 2, 10/2, which so it becomes closer to the price. RSI 14, I will change the parameter will remain 14. What I will do is I'll hide the background. I don't need my upper limit. I don't need my lower limit also. I just need a line which is gonna plot 50. So what I will do is I will just change the upper limit to a dashed line and change the value to 50. I can change the color, say, to blue. So this is RSI ka 50 line. Okay. This I will again change the input to 5 period ATR, and stochastic I will change it to 55, 34 and 21. Why 55, 34, 21? Why? Because they are simply the Fibonacci numbers, and I am trying to identify the medium term trend by the stochastic. Okay, and I will again hide these boundary limit. I just need the %K line and the %D line. So this is I have plotted. So you can just check. It's RSI 14, stochastic 55, 34, 21, super trend 10/2, Bollinger Band 22, and ATR 5. This is how I have plotted it, and you can save this template, the golden swing strategy. Till here, is this clear? Then I come to the strategy. Yes, length means number of bars. Okay, so getting the template now, what is the strategy? It is a very, very mechanical strategy again. You don't really need a brainer to do it, just that the parameters should fall in place. So if it is a buy, let's discuss the golden swing buy strategy. RSI should be above 50. So we've already plotted the blue line. Ki agar RSI 50, price should be above the super trend. The super trend will be normally green because we are looking at the buy strategy. So our price should be above the super trend. So it will be super trend should be below the mid Bollinger Band. So mid Bollinger Band का जो maroon line है, super trend should be below the mid Bollinger line. Stochastic should be having %K above %D. मतलब blue lines should be above. The price low should be below the super trend. इसका मतलब that particular candle should have made a low below the super trend. This is purely a daily time frame strategy. Okay. When do you buy? You simply buy in the last 2 minutes of the candle, or if you don't buy in the last 2 minutes of the candle, next day opening also you can buy after the market settle down. So at 9:30 you can simply buy it. So buy in the last 2 minutes with a stop loss of ATR. Why do you use a ATR? ATR is measuring the volatility again. So stop loss will be 1.1 ATR of that candle which has made the low, the candle at which you are taking the trade. And target will be 2.2 ATR. Okay? Now let's look at it an example. By the last 2 minutes means that we are looking at the daily chart, Abhishek. So if the candle is forming like that, so what you do is simply in 3:30, just before the market is closing, you should initiate a buy. So it becomes a BTST trade basically. Now look at Sun Pharma. Let me show you. It was a very, very recent one. Okay, now see. If you look at this candle, okay, this particular candle, this green candle which I'm talking of, what are my parameters? I'm opening this parameter for you all to show. RSI should be above 50, price should be above the super trend. Super trend should be below the mid Bollinger Band. Now see here. In this particular, price should be, sorry, RSI should be above 50. So this is my blue line, which is 50. RSI is above 50. It is 61. Stochastic, the %K should be higher. That is, the blue line should be higher than the red line. It is there. The super trend should be below the mid Bollinger line. So red line is the mid Bollinger. The super trend is below the mid Bollinger. The price low should be below the super trend. So look at this candle. It has a low which is going below the super trend. Am I clear? ATR is average true range. This is used only to calculate your stop losses and targets. Okay, I will just repeat again. I will repeat it from the beginning. So this is the strategy. Wait. RSI should be above 50. Price should be above the super trend. एक एक करके करते हैं, ठीक है? Look at this example. RS in this particular candle, this green candle, I'm illuminating it. See, this particular candle, so this particular candle, now what is it saying? The first criteria says RSI should be above 50. So this is RSI above 50. Stochastic percent K line should be higher than the red line. So this, in this case, the stochastic is also fulfilling my criteria. Now coming to the super trend and Bollinger Band criterias. Price should be above the super trend. So yes, price is above my super trend. The low of that candle should be below the super trend. So this, look at the low. The low is below the super trend, right? And the super trend should be below the mid Bollinger Band. So this red line is the mid Bollinger Band. The super trend is below the mid Bollinger Band. In fact, we don't need the upper band and the lower band. We can clearly hide it also. So I can simply hide these two lines. So it makes your life simpler. So again, super trend should be below the mid Bollinger Band. Till here, is everybody clear? Or should I repeat again? Chirag, yes, you can actually plot the 20 SMA also. We can do that. Basically, we don't use simple moving average too much, so that's why. But yes, we can. So if I just simply so you can simply plot the 20 SMA, even that works well. Right, I'll show you all the indicators. I'll share the PPT also. Look at the PPT and I'll show you all the settings. Don't worry. I'll just show you all the settings again. Let me plot it again for you all. I'm just removing all the indicators again and plotting it again for you all. So what will I do for first thing what I do is I will plot the super trend. I plot the super trend and I change the setting to 10 factor 2. So it becomes closer to the price. Okay? This is first indicator. The second indicator, you can either plot a Bollinger Band, you can even plot a moving average 20 period, simple moving average, which will be 20 period. So I'm plotting the simple moving average. You can plot the 20 period simple moving average. So this is your 20 period simple moving average. Okay. The third thing what you plot is the RSI, relative strength index. What do? You will keep the parameters same as 14. Style, just hide the background. You just need a 50 line, 50 period line. So you let the upper limit be there, change the value to 50, and you can just make it a dashed line, change the color so that it is easily visible. Okay, I hope everybody's got this. So this is the RSI, because we need to check 50 period RSI, 14 period RSI should be greater than 50. Okay. Now coming to the next, which is the stochastic. What do I plot? I plot the stochastic indicator. Okay.
Stochastic setting change. I don't need my upper limit, lower limit, or my background. My input will be simply 55, 34, 21. This is my Fibonacci numbers, right? Okay, so these are the parameters, and then last but not the least, I will plot the average true range, ATR. This is only to find out the stop loss and the target. The ATR, I will change it to 5 period. This is the 5 period ATR which I have plotted. Okay. Now look at this particular candle here. This is a green candle. What is my criteria? My criteria, I'm showing you all again here. RSI should be above 50. Price should be above super trend. Super trend should be below mid Bollinger Band, or I can say here moving average 20 period. Stochastics should be Bollinger Band, Aditya, because I was actually only checking the mid Bollinger Band, and the mid Bollinger Band is nothing but the 20 period simple moving average. So I used to use it at where is this? Sorry. I use the mid Bollinger. You can also use the moving average. It's all the same. Okay. The price should make a low below the super trend. So coming to this particular, now look here. This particular candle, elongating this particular candle, RSI is 58. The stochastic blue line is above the red line. Okay. And price is above the super trend. Price low is below the super trend. And super trend is below my mid Bollinger Band or 20 period simple moving average. All the criteria is fulfilling here. You will buy in the last 2 minutes of the candle or immediately in the next morning. So suppose you buy around this level, your ATR is 21 rupees. So 21 into 1.1 will be your stop loss. So let's calculate here. Another example. Let me check with yes. Yes, Aditya, definitely you can use. You can use. Why not? So ATR is, see, you see the value here, 21.6 is my ATR. So 1.1 into 21.6 is your stop loss. This is simply a money management system. And 21.6 into 2.2 is your target. I'm getting the ATR value here on the right hand side. So I simply want the value of the ATR. I'm not moving the screen. I'm just checking the ATR value. Let me just show you another example. Now, yeah, look here. Tata Consumer. Okay. This particular candle, can you see this particular candle? Yeah. So in Tata Consumer, RSI is above 50. Stochastic blue line is greater than the red line. Price is making a low below the super trend. Price is above the super trend. The super trend line is below the moving average line. So this is a perfect candle. Your ATR is 19.36. So 19.36 into 1.1 is your stop loss. 19.36 into 2.2 is your target. Anirban, G, right hand side on the indicator window, you will see the values. Look here. The values come here. Sorry, left hand side, not right hand side, left hand side. Okay? Have you all got it? Okay. Now coming to the next. Now look here. Extreme. Now Tata Consumer gave you a golden swing buy yesterday, exactly at Friday closing. See how super price is, RSI is above the 50 line, 55. Stochastic is last candle. It was a buy yesterday just at the closing. How? RSI is above 50. Stochastic is blue line is higher than the red line. Super trend is below the moving average line. Low of the price is below the super trend. Closing or price or the current price is above the super trend. So you buy somewhere around here 603 at the closing price, approximately 16.96 is 17 into 1.1 is your stop loss, and 34 rupees from this level is your target. Girish, you will not wait for buy. It was a buy at 3:33, but next day morning on Monday early morning you can enter into a buy in the morning. ठीक है? Is this clear, everybody? No, the candle color does not is not important. The candle color is not important. Again, I am repeating, what we are looking is that the price should be above the super trend and the price ka low should be below the super trend. So see here, the price is still above the super trend and the price low is below the super trend. So 400, so in this particular case, look here, the closing price is say 602. The ATR is 617 rupees. So 17 into 1.1. Wait a minute. 17 into 1.1 is 18.7. So 602 minus 18 0.1 is 583 is your stop loss. and your target is Am I audible? I think my Wi-Fi got disconnected in between. Yes. And you all can see my screen, right? Yeah. So I will again repeat here my stop loss and target. So basically ATR is used to just identify the stop loss and target. ATR indicator. ATR is average true range. So whatever is the ATR on that candle. So this particular candle, the ATR is 16.96. I'm taking it 17 rupees. So 17 into 1.1 is your stop loss. So 18.7. So 603 minus 18.7 is your stop loss. 584 rupees का stop loss है, and 603 plus 1.1 into 18, 17, sorry. 2.2 into 17, 37.4 is your target plus 603. So 640 is your target on the ऊपर का side. ठीक है, समझ में आया सबको? So Tata Consumer is a current trade for Monday, which you can trade on the golden swing strategy. Again repeating, this particular strategy has around 80% strike ratio. Yes, Akhilesh, tell me. Yes, Aditya, you can trade derivatives also using this strategy. What needs to be remembered is that this strategy is only to be used on the daily time frame. Investing, I am showing you all because in TradingView, you cannot plot more than 3 indicators. You can definitely use Spider. You can, if you have Iris Plus, you can put a screener also. You can put all the criteria. Why can't you find on the real time basis? Right. So out of so many stocks, you can run a screener at the end of the day and figure out, and next day morning, you can immediately take up the trade. No, there is no screener as such available, Akhilesh. Abhishek, what you did not understand, can you please elaborate? I will repeat. कौन सी कैलकुलेशन नहीं समझ में आई? स्टॉप लॉस एंड टारगेट, सो बेसिकली देखो, ये जो लास्ट कैंडल है इसका एटीआर कितना दिखा रहा है? 16.96. ये रहा नीचे में ये फिगर 16.96 हमारा एटीआर है. तो स्टॉप लॉस क्या होगा हम लोगों का, जो भी एटीआर की वैल्यू है इंटू 1.1, एंड जो भी एटीआर है उसका 2.2 हमारा टारगेट है. फ्रॉम द एंट्री लेवल 1.1 इज माय स्टॉप लॉस, 2.2 into ATR is my target. और आदित्य, यस, अगर गैप अप डाउन ओपनिंग हो जाएगा तो प्राइसिंग ऊपर नीचे हो जाएगा तो रिस्क रिवॉर्ड थोड़ा शेकन अप हो जाएगा, डेफिनेटली. तो अगर गैप अप गैप डाउन हो जाएगा तो उतना वैल्यू आपको अपना प्रॉफिट या स्टॉप लॉस से हटाना पड़ेगा, और क्या. No, you can't do much about it, Aditya. So suppose, assuming, so ये वाला live trade है, you have seen this trade. Now tomorrow, on Monday morning, assume कि Tata Consumer opens at 610. तो आपका टारगेट तो 640 ही रहेगा, आपका टारगेट तो 640 ही रहेगा. So you are actually foregoing that much amount of money. So what you could do is you can actually put a stricter stop loss if required. You can't really do much about it, Aditya. In case of a down, आपका stop loss कम हो जाएगा. अगर 584 हमारा stop loss था, अगर 590 के पास खुलता है तो you enter at 590 because आपका सिर्फ 6 रुपीज stop loss है, and target तो आपका अभी भी 640 है. सेम केस, अगर गैप डाउन ओपन होता है तो वो आपके फेवर में ट्रेड करेगा, अगर गैप अप ओपनिंग होगा तो ऑब्वियसली आपके फेवर में नहीं रहेगा वो चीज. I hope I'm clear. Please, any doubts, ask me. Sell strategy. ठीक है. Now going to the ulta side of this, the opposite side, which is the golden swing sell side trade. Everything remains the same. The indicators remain the same. The parameters remain the same. We just do the opposite. RSI should be below 50. हम लोग क्या किए थे पहले केस में, RSI should be above 50. इस केस में RSI should be below 50. Price should be below the super trend. Super trend should be above the mid Bollinger Band or the exponential simple moving average. Stochastic blue line should be below the red line. High of the price should be above the super trend. And again, 1.1 will be the ATR, 2.2 is the stop loss. Let's see a live example. ये देखिए, look here. Look at this particular candle. This particular candle. See, RSI is below 50. Blue line is below the red line. So these two parameters are met. Price should be below the super trend, which is true. Price high should be beyond the super trend line, and super trend should be below the mid Bollinger Band. Oh, sorry, super trend should be above the mid Bollinger Band. Sorry. Let me figure out a sell trade for you. Runku, I think you can speak to the spider people and get a screener done on this, I don't think there should be a problem. Aditya, yes, on the short selling side, you will have to trade only in the futures segment. What I'm trying to say, this is a golden swing daily strategy. You can buy in the cash market or the futures market. Selling will only be done on the future segment because cash market you can't go short, right? Look, there's a perfect no. Just a minute, it's loading. The data is loading. Just give me a minute. I think this is a question. This is a sell. Let the stochastic load. This is a perfect sell, I feel. The price is above this, below the super trend. High is above the super trend. Moving average is below the super trend, and RSI below 50. I think this is also just the data is not loading. Just let the data load, and I think this is a perfect sell. Runku, I did not get a question. Get your question. Aditya, yes, you please may ask. You may ask your question, Aditya. No, Aditya, short selling was earlier also not permitted. In the cash market, even earlier to Modi government, the short selling was not allowed. Never was it allowed. Okay, have you all understood the golden swing strategy both on the buy and the sell side? Runku, if you want to buy put options, you will basically, I will tell this to everybody, if you are trading options, your analysis will be based on the underlying asset only. You will look at the cash market or maximum futures ka chart only, apply all the indicators which any which ways we are applying. Your analysis will always be on the spot asset. And then once your analysis is done, once you have a this thing view in your mind, then you will think of strategizing it better through options. Okay, so just because you want to trade in options doesn't mean that your analysis will differ. No. Okay. Do you all have any other questions, queries? Aditya, we will discuss this tomorrow in tomorrow's session. View Nifty and Bank Nifty analysis. Let's do it tomorrow. So tomorrow I will be discussing one long-term investment strategy. Number one, I will be discussing one crude oil strategy, an intraday crude oil trading strategy, and we will discuss some normal charts like Nifty and Bank Nifty. Okay. Any other questions? Okay. So I will share this PPT tomorrow after the session ends, because this particular PPT only has tomorrow's tomorrow's session's input. So what I will do is after tomorrow's session, I will share this PPT with you all. I hope you all have enjoyed the session. Thank you all for such a patient listening. You all can still practice whatever we've been discussed today. Screen the charts, figure out if there is any other golden buy or golden sell opportunity, which we can discuss it tomorrow. Okay. Thank you, everybody. Thank you so much.